Hello, hi people, how are you? I hope you're doing good. So, on that note, come on, let's get started with part 3 of our solution discussion for November 2020 CA Foundation Principles and Practice of Accounting paper. So, in the previous parts, we had done with question number 1 and 2, but not in entirety when it comes to question number 3. We had done question number 3A completely, consignment. 3B was also done, but in 3B we were done with part 1 and part 2, the optional ones. What we had not done was 3C. Yes, 3C. 3C is a question on bills of exchange. So I had got messages regarding this question on the right after the examination day saying, sir, is this question wrong? But actually the question was not wrong. Many of them thought the question was wrong and you would get grace marks for this. Sorry for the belief that you people kept high about this question and you getting grace marks. Not to worry. You might have done it rightly, or even if not completely, you might have done it right to a very good extent, which will fetch you marks for the steps. This is a question basically on the accommodation of a bill, wherein it's a financial adjustment, wherein one guy will raise the bill, get it discounted, share the proceeds. Yeah, so such a one. Little interesting. Let us do this one. Come on, it's a 10 marker. So 3C is what we're gonna solve now. Question number 3C, bills of exchange, journal entry based question. Question number 3C. Yes. On bills of exchange. Let us read this. Suresh draws a bill. So Suresh is one of the person, the other person is Anup, as you can see in the question. Let us read the last line of the question. That will help us understand what exactly are we expected to be doing in the solution. Pass necessary journal entries for the above transactions in the books of Suresh. So we have to assume that we are Mr. Suresh or we are Mr. Suresh's accountant and they need to pass journal entries. Okay, let's get started. So the solution starts as in the books of Mr. Suresh. Suresh is a very famous personality. It shouldn't be difficult remembering him. Perfect. In the books of Mr. Suresh. So they basically asked us to do journal entries. So I would have date column followed by particulars. Then I'll have a ledger folio column, which will have no impact at all. Then we'll have debit amount. I hope I can use the shortcut. Debit amount and credit amount. Yes, this is the format. Yeah, particulars column will be little bigger and then ledger folio can be more small, and then we'll obviously have our debit amount and credit amount columns. I can merge this. Yep. Okay, let's get started. So the first one, we are Mr. Suresh. Remember that Suresh draws a bill for rupees 15,000 and Anup on 15th of April for 3 months, which Anup returns to Suresh after signing. So Anup is the person who is accepting it. Suresh is the person who is raising it. So Suresh is the drawer. Anup is the drawee, and Anup is the person who is a payer. And Suresh might be the payee, but person he might not be the person who's receiving the money. It can be someone else also. He can direct that bill to someone. He can either discount it, endorse it. We know it, right? Negotiable instrument. You might have read this chapter already. Yeah, I've in fact covered this topic in detail, not completely, little in detail when we did RTP discussion. You can go back and watch that as well if you want. So let's start. So it is a bills receivable to Suresh. So the journal entry will be bills receivable account debit. Why? It is an asset to Suresh. Is receiving a bill accepted by Anup. So I'll write bills receivable account debit. Who's giving it? Credit the giver of benefit. Or Anup was supposed to pay us money, so he's giving it. It's a decrease in the asset credit. Or other way around, credit the giver of benefit. Or we might have to pay Anup regarding this bill, the money. So it's a liability increasing credit or an asset decreasing credit. So to which account? Anup account. This bill is on what date? 15th of April. Yes, 15th April 2020. What exactly is the amount? 15,000 rupees. 15,000. 15,000. Perfect. So we're done. So for these transactions, you can actually put narration. I'm skipping it, but okay, I'll put it for a couple of them so that you'll understand. Being bill accepted by Anup. As sweet and simple as that. It need not be very polished English or something. It need not be Webster's English or Oxford English. Simple. You don't have to use your creativity as well. Just in the question, whatever statement is there, copy paste the same thing. Means you need to write the same thing with the word being in the beginning, and that would serve the purpose. Let us go ahead. We're reading the third line now. Anup gets it discounted with the bank for 14,700 on 18th April 2020. The question continues, but we'll read little and write the answer little. So what date is it? 18th of April. What is happening? Discounting of the bill. Come on, let's go. 18th of April. 18th April 2020. Bill is getting discounted. When the bill is getting discounted, you give the bill to the banker and banker will give you money. So bank balance will increase. Bank is asset increasing, so bank account debit. Okay, how much will the banker pay? Banker is paying you 14,700 rupees. When the banker is giving you 14,700, what is happening? You are giving the banker the bill. So bills receivable is going out. It's an asset which is going out, which is being a reduction in asset. So I would have to credit it. Reduction in asset is to be credited. What is the value of the bill that's going out? It is 15,000. Yes, you heard it right. 15,000 is the value of the bill given to the banker, but banker is giving you only 14,700. There is difference of 300. This difference of 300 is basically our discount because the money will be realized from the bill after 3 months, but the banker is paying the money to you right now. Banker will deduct some money towards discounting charges, that is 300. So that 300 is an expense. Expense is to be debited. Discount expense, this is okay, guys. Discount expense account debit. Now, if there is a genuine transaction, okay, fine, I'll write here being discounted with bank. Yeah, if there is a genuine purchase sale transaction between Anup and Suresh, where Suresh has sold goods to Anup, Anup has to pay money to Suresh. Instead of paying cash, Anup gave bill. This is fine. But in this particular question, what is happening is there is accommodation of a bill. There is no trading transaction between Anup and Suresh. Anup also wants money, Suresh also wants money. If they go to the banker, banker isn't giving them any loan. So what are they doing? What they do is Anup accepts a bill raised by Suresh. Suresh takes it to the banker, gets it discounted, and that proceeds whatever Suresh received, 14,700, is being shared between Suresh and Anup. You get that? On maturity also, that amount payable by Anup to the bank, whatever 15,000, see now 15,000 bill has been accepted by Anup. So on the maturity date, banker will go to Anup and ask for money. That date, Anup and Suresh has to share the money payable to the bank in the same ratio. Yeah, let's read the question. It says like, and we're in the fourth line, and remits 1/3 of the amount to Anup. So out of this 14,700, what is there? 1/3 is being shared to Anup. You get that? So they have not given the date. Have they given the date? No, I'll assume it to be on the same date. What is happening? Money is being paid to Anup. So when it is paid to Anup, I'll write Anup account debit. How much is paid? 1/3. So I will write here to bank account. How much? 1/3. 1/3 of this money, what is received? How much is received? 14,700. So it would basically be paid 14,700 into 1 divided by 3. So how much will he be paid? Will be paid 14,700 divided by 3. He'll be paid 4,900. You get that? But Anup's liability will be 5,000. You'll ask me why? Because this 4,900 comes at a cost. How much is the cost? 300 rupees is the charges for 14,700. Yeah, 300 is what? Suresh's expense. But it will be completely Suresh's expense when he gets to use entire 14,700. Out of this 14,700, he is giving away 4,900 to Anup. So that is 1/3 of the money received. So 1/3 of this expense also should be borne by him. So I will write 300 into 1 divided by 3. How much is it? 100 rupees is the expense to be shared. So what exactly is happening here? So what is happening here is basically Anup and Suresh both want money. Both don't have money. They go to the banker and they get it discounted. So what is happening is bill number 1. Yeah. Anup. Okay. Suresh. Anup. Total. I'll put this bill number 1 here. See, bill number 1 here. So out of this bill, what is the value of the bill? Value, or what do you say, nominal value? Yeah. Bill value is 15,000. That is to be shared by them in 1/3 ratio, wherein Suresh gets 10,000, Anup gets 10,000, sorry, 5,000. Then what is the discount charges on that bill? 300. 300 also should be shared in the same ratio. He has to take 200 expense, this guy has to take 100 expense. So discounted proceeds. Discounted proceeds. How much is it? Or can I say bank receipt? No, discounted proceeds would do. So you would receive 14,700. That 14,700 also should be shared in the ratio 1 is to, what to say, 2 is to 1. Yeah. Basically, that's it. 1/3 will be going to, okay, fine. If I have to tell you in the language, you'll understand. 1/3 will go to Anup. Divided by 3. Yeah, 4,900. How about this guy? This guy gets 2/3. 9,800. If you see the total, it will come to 14,700. Do you guys get that? Yes, that shouldn't be a problem. On maturity of this bill, what exactly would happen? That's what you need to focus on. On maturity of this bill, Anup would have to pay 15,000 to the bank, out of which 10,000 will be given by Suresh, 5,000 will be Anup's contribution, and it will be paid to bank. Understood? They're sharing the proceeds, they're sharing the expense, they're sharing the, what to say, maturity amount payable in the same ratio. What is the ratio? 1/3. 1/3 to Anup and the balance to Suresh. Okay, perfect. Till here, there shouldn't be a problem. What will be the narration here being? Shared to Anup. Being the discounted proceeds shared to Anup. Perfect. Come on, let us go to next one. So what's happening after that? We are in 1, 2, 3, fourth line. Fourth line after the full stop. On the due date, Suresh fails to remit the amount due to Anup. On the due date, the bill is already discounted and with the banker. Banker will go to Anup. Anup has to pay to the bank 15,000, but not in entirety. Anup from his pocket will pay 5. Suresh should pay 10,000. Because when the bill got discounted, Suresh didn't pay the entire money to Anup. 14,700 mein only 4,900 he gave. 9,800 he kept it with himself. Against that 9,800, 200 rupees being discount charges, 10,000 rupees, so what to say, Suresh should pay to Anup. But what happened? Suresh failed to pay. See, on the due date, Suresh fails to remit the amount due to Anup. Okay. So what does he do? Anup will raise a bill now and Suresh is accepting it. Read this. So, okay, due to Anup, but he accepts a bill for 17,500 for 3 months. So it is bills payable or bills receivable. From the perspective of Suresh, it is bills payable. So what date is this happening? This is happening on the due date. So what is the due date? 15th of April, say 3 months. 3 months, right? Yeah, 15th of April, say 3 months. April, May, June, July. 15th of July is what I can date. 15th July. However, if they had given a specific date in the question, I would have taken. Sir, can I take 18th July? Yeah, boss, you can take 18th July. Why? 3 grace days, maturity days. It wouldn't matter much. Farak nahi padta hai. Okay. How much? 70,500 ke liye bill he'll accept. So that bills payable is a liability to Suresh. So you would have to credit it. Bills payable account. How much? 17,500. 17,500. Done. The bill is being accepted. Bills payable is a liability, credit. Anup is the person who's basically become our debtor. He should pay us now, because if we accept this bill, later banker will come and ask me no money for 17,500. So Anup also has to share this money to me. So Anup account will be debited. Perfect. What is the amount? 17,500. Bill drawn by raised bidder. Anup accepted. Perfect. Okay. Old bill ke liye how much do we owe Anup? See, 15,000 we created Anup account here. We debited his account by 5,000. So technically speaking, by the ledger also, we should owe him 10,000. Or other way around, 15,000, it was a financial adjustment, no? 1/3 is Anup's share. 2/3 is my share. I was supposed to pay 2/3 of 15,000, which I didn't pay. So the 2/3 of 15,000, that is 15,000 into 2 by 3. 10,000 rupees is what I have to pay to Anup. 10,000 rupees is what Suresh, has to pay to Anup. Other way around, we can see where and all I have written Anup account. Anup account credit 15, Anup account debit 5. So credit 15, debit 5. So there is credit balance of 10,000. Credit balance of 10,000 in the sense I owe Anup 10,000. Suresh owes Anup 10,000. Got it? Okay. Against that money is raised a bill. Now Anup should raise a bill for how much? 10,000. But how much did he raise the bill for? 17,500. How much did he raise the bill for? 17,500. So he has raised a bill for excess money. So that excess money he should pay us. You get that? Yeah, that is the point. Now let us see what will Anup do. Anup will usually get the bill discount. Okay. For 3 months, which Anup discounts for 17,400. What will be the journal entry when Anup gets it discounted for 17,100? No entry. Why? It is Mr. Anup who's getting the bill discounted. It is not Mr. Suresh. Who are we? Mr. Suresh. When Anup gets the bill discounted, there will be no entry in the books of Suresh. Sir, then when will we write the entry in the books of Suresh? We will write the entry in the books of Suresh when Anup shares that discounting proceeds with Suresh. I repeat, the entry will come in the books of Suresh when Anup shares the discounted proceeds with Suresh. Let us see what is happening. Okay. Anup discounts for 17,400 and remits 2,825 to Suresh. So how much money is Anup giving to Suresh? 2,825. So come on, let us write the entry for 2,825 rupees what we are receiving. So how much did we receive? The date is not given. I'll assume that it is discounted on the same date, or we'll leave it. Okay, date not given. Yeah, we receive money. So I'll write bank account debit. How much? 2,825. 2,825 is received. Okay. So I will write here to Anup account. Anup credit the giver of benefit. Anup give us benefit now. So don't you think we'd have to credit Anup account? Am I right? Yes. Now how much should we create Anup account? And why did I leave that gap? I left that gap because Anup account has to be created, but along with that, we would have to bear some discount expense. Now, what exactly is this discount expense? This is with regard to bill number 2 now. This is with regard to bill number 2 now. Concentrate exactly like our bill number 1. Now we're going to do bill number 2. This is bill number 2. What is the face value or bill amount? Bill amount is 17,500. Bill amount is 17,500. 1,500. Yeah, all this is gone. Yeah, we have to clear all this. How much is the discount charges that is given to us in the question? 17,500. Anup discounts it for 17,100. 17,100 is what he receives. So how much was the discount? 400. Yeah. How much did Anup give us? Anup gave us 2,825. So the money 2,825 was given out of what? Out of the money received by Anup, isn't it? So 2,825 will come in the Suresh column in the discounted proceeds aspect. Okay. So technically it gives us 2,825 plus 10,000. You might be wondering, sir, what is this 10,000? Now, the fundamental question that I'm asking is, why did bill number 2 come into picture? Because with regard to bill number 1, Suresh was supposed to pay some money to Anup, which Suresh couldn't pay. How do you say that? They have given here, on the due date, Suresh fails to remit the amount due to Anup. Suresh couldn't pay the money to Anup. Anup wants money. So what did Anup do? Anup raised a bill on Suresh, got it discounted. So first thing that he'll do from the discounting proceeds is 10,000 he'll take his money. 10,000 what Suresh was supposed to pay to Anup, which he didn't pay, he'll take. So that is technically that money was given to Suresh and Suresh gave it back to Anup types. 10,000 rupees is owed by Suresh to Anup. So out of the discounted proceeds, which is to be shared between Suresh and Anup, Anup will first take 10,000, which is like 10,000 out of that proceeds is given to Suresh, but Suresh gave it back to Anup types. It is assumed so. Further, 2,825 is given. So much money is totally belonging to Suresh now? 12,825. I'll repeat. 12,825. How am I getting 12,825? It is very easy. 10,000 rupees towards the old balance and 2,825. Now what is paid to Anu? Now what is paid to Suresh? Totally 12,825 rupees out of 17,100 belongs to whom? Suresh. So what is the money that belongs to Anup in that case? 17,100 minus 4,275. Yeah, so this is the ratio in which you need to share the discount expense. Here, this guy took 1/3, this guy took 2/3. So everything is 1/3, 2/3. 1/3, 2/3 ratio. Here you need to share it in this ratio. What is the ratio? Now, I am going to do it this way. It would be 400 multiplied by 4,275 divided by 17,100. You're basically going to do the ratio proportion types calculation. I can insert another row here. So exactly are we getting it? 400 multiplied by 400 is to be split in the ratio. This 400 is to be split in the ratio of 12,825 and 4,275. See, he is getting 4,275 out of 17,100. How much of 400 should he bear? See, 4,275 is 17,100. 400 is ಎಷ್ಟು? ಇಷ್ಟಕ್ಕೆ ಇಷ್ಟಾದ್ರೆ ಇಷ್ಟಕ್ಕೆ ಎಷ್ಟು? इतने में इतना तो इतने में कितना? ಇಂತಕಿ ಇಂತೈತೆ ಇಂತಕಿ ಎಂತ? ಈತಕ್ಕೆ ಈತಾಂಡ ಈತಕ್ಕೆ ಈತ. ಇವಳಕ್ಕೆ ಇವಳೋನ ಇವಳಕ್ಕೋ ಇವಳೋ. ಅಕ್ಕ ಕಿತ್ಲ ಚಲರ್ ತಕ ಕಿತ್ಲೆ. We have to just do cross multiplication. So technically I am doing 4,275 multiplied by 400 divided by 17,100. 17,100. How much do I get? Is equal to 4,275 multiplied by 400 divided by 17,100. I would get 100 rupees. How about this case? Again, you would have to see for 12,825 rupees is what is getting out of 17,100. Out of 400, how much should he bear? That's it. Is equal to cross multiplication. 12,825 multiplied by 400 divided by 17,100. 400, 300 and 100. This 400 rupees discount charges is to be shared between Suresh and Anup in the ratio 300 and 100. You get that? In the same way, this also has to be shared between them. Yeah. Okay, if you want, I can do it. See, for 12,825 multiplied by what? 17,500 divided by 17,100, 13,125. And here you can simply do 17,500 minus 13,125, 4,375. You would get this. You get that? So, having considered that, see, 2,825 is paid in cash. Actually, it is 12,825 paid. But 10,825, 10,000 will be paid and received back. So instead, we'll write entry only for 12,000 or 2,825. 10,000, whatever the realization proceeds is received by our Anup. Anup will pay to Suresh and Suresh will pay back that 10,000 to Anup. It is settled on account. So I'm writing 2,825. Now, discount. What is the share of discount that is transferred to Suresh? Suresh's share of discount. How much? 300. 300. 300 rupees is his expense. Yes. What should be the amount that should be returned to Anup account here? Total. How much is it? 2,825 plus 3,000 plus 300. It comes to 3,125. What is this? Being discounting proceeds shared after adjusting old dues. You get that? Done. After this, what is happening on the maturity? Let us see. Before the maturity of the renewed bill, Suresh becomes insolvent. How do you know that he's insolvent? He tried jumping into water. After he jumped into water, he didn't dissolve. That's how people check whether they're insolvent. I was just kidding. Okay, jokes apart. He becomes insolvent. When he becomes insolvent, he's not able to pay the money. Okay, on the maturity date, banker will go to Anup. Sorry, banker will go to Suresh. Suresh says, I don't have money. Suresh says, I don't have money. So when Suresh says, I don't have money, what is happening? It's a bill dishonored. So let us write the entry. Date not given. Before the maturity date. We don't know what date it is. We'll just write it. We'll just leave that date not given only. So banker will come to you and you don't pay the money. So when the banker comes, he'll give the bills payable to you. And you are unable to pay the money. And what is the value of the bill? It is 17,500. 17,500. Are you able to pay? No. If you don't pay, what will happen? Banker would deduct that money from Anup's account. Banker would deduct that money from Anup's account. Papa. Correct or not? And why am I creating Anup's account? Why am I creating Anup's account? Because I would have to pay Anup, no, 17,500. It is like reversal. When basically the bill was accepted, the journal entry was Anup to bill payable. Now when the bill is dishonored, it will be bills payable to Anup. Reversal of the entry. So journal entry for dishonor. Being bills payable dishonored. Now, how much does Suresh owe Anup? If your answer is 17,500, the answer is wrong. Anup owes Suresh not 17,500. Anup owes Suresh 3,125 of this bill number 2, 10,000 of bill number 1. So Anup owes Suresh totally, Suresh owes Anup 13,125. What about the remaining money? Remaining money has to be paid by Anup from his own pocket. You get that? So much money will not be paid. Now you might ask, sir, can you substantiate? How is that 13,125 correct? I'll repeat, 3,125 from bill number 2, 10,000 from bill number 1. Yeah. Now I'll substantiate it to you with the help of an easier example. Concentrate. Anup account, 15,000 credit. Okay. Second entry mein Anup account is not there. Anup account 5,000 debit. So 15,000 credit here, 5,000 debit here. What will be remaining? If you net it off, 10,000 credit will be remaining. Credit means liability. Suresh owes Anup 10,000. Correct? Done. Let us go to entry number 4. 17,500 here. 17,500 debit here. And that 17,500 is credit here. That will get nullified. 17,500, whatever is debited to Anup account is credited here. That's getting nullified. What is there here? Anup account credit 3,125. So this 3,125 is what he owes to Anup because of second bill. So total money that Mr. Suresh owes Mr. Anup is 10,000 for bill number 1 plus 3,125 for bill number 2. That is 13,125 rupees. Come, let us go to next one. What does it say? Before the maturity, renewed the bill. Suresh becomes insolvent, and only 50% was realized from his estate on 31st October. So only 50% of it is realized. Okay, let me write here. Date not given. No, sorry, they've given. No, what is it? 31st October. 31st October 2020. So Anup is getting paid. How much are we supposed to give to Anup? I told you 10,000 for bill number 1, 3,125 for bill number 2, totally 13,125 is what you're supposed to pay. Out of that, 50% you can pay. So I'll write to bank account. You can write to cash account also. Nobody is going to stop you. %50 of 13,125. And the balance money you would not be able to pay. You get that? Okay. Can you call it bad debts? Now, bad debts is expense. It is bad and it is credit here. How can it be bad debts? Bad debts it is to Anup. Anup will not receive money. So to Anup it is bad debts. What is it to Mr. Suresh? To Mr. Suresh it is deficiency. He doesn't have so much money. You get that? Bad debts is an expense. Deficiency is like income. It is like income. It's not actual income. It is like shortfall. You get that? So bad debts is an expense debit. Deficiency is like an income credit. It is bad debts to the person who's supposed to receive. It is deficiency to the person who's supposed to pay. So I'll write here deficiency. How much is it? It is again 50%. So shall I write it is equal to into 0.5, or you can do divided by 2 also. You'll still get the same answer. That's 6,562.5. This is it. This is the journal entry that's been asked. Okay, being, I'll write the narration. I told I'll not write, but I ended up typing narration for everything. Being amount settled. Being 50% of the money received. Okay, being 50% of dues paid and balance considered deficiency. You guys get that? That's it. We're done with the answer. So this is how you do this question. I will not tell that this is a very easy one. If you would have done the entire institute material, and then if you would have understood concepts rather than just solving too many problems, then you would have been able to crack this. But if you are very much lying only with going by trend analysis, then this would have troubled you. This question would have definitely troubled you in the exam. In fact, you might have skipped it or done it wrong. I'll just mark it, make it beautiful to see. Yes, perfect. That's it. We're done with entries. You want me to put line after this? Every transaction? I can do that. Yeah, this is how you present. You can draw these lines later in the exam. Don't write it when you're writing the answers. Write all your answers. At the end, if you have time, come back to draw lines. Yeah. And this working note is actually not part of the answer. Even if you skip doing this working note, you would still be getting full marks. Yes. Come on, let us go to next one. So we're solving question number 4A now. The question based on partnership. Let's do it. Before A. Few of you have been texting me asking, sir, you didn't share the Excel sheet. I'll share it now. I'm going to say after I finish the entire thing. If I put it in between, Suma, it will not be an updated file completely. So what I do is I'll finish this whenever this entire suggested answers discussion is done. I'll put the link to this Excel sheet. You guys can download and then see it. 4A. Messrs. TB is a partnership firm with partners A, B, C sharing profits and loss in the ratio 3 is to 2 is to 5. That is 3 by 10, 2 by 10, and 5 by 10. The balance sheet of the firm is given. Let's not waste time reading the balance sheet. Let's go ahead. It's mutually agreed. There's a lot of things given. Come to the last thing of the question. What do they want? You are required to prepare revaluation account and partners capital accounts after reconstitution along with working notes. So we're supposed to prepare two things. Number one, revaluation. Number two, partners capital. Anything other than revaluation account and partners capital account is working notes. So they're asking us to prepare two things. Number one, revaluation account. Number two, partners capital account. Other than those two, whatever we do will be our working notes. Come on, let me put format for revaluation account and partners capital account. By the way, what is it? It is in the books of Messrs. TB. Company in the books of Messrs. TB. That set is given. So I'll stick to that much. Okay, what do they want us to prepare? They want us to prepare revaluation account. I will not have date column, particulars column, amount column, particulars column, amount column. Let's make it a little bigger. Yes. So this will be my particulars. Okay, I'll first put the heading revaluation account. Particulars. Amount column. And let this be my particulars. Here I'll put amount. How many columns here? Particulars. Yeah, perfect. Let me just make little boxes for this one, and then I'll be able to copy paste this for the credit side. Yes, so I'm done with the debit side. I'll copy this and paste it to the credit. That becomes my credit side. Yes, what is this that we just prepared? What is this that we just inserted the format for? This will be my revaluation account. First thing they've asked, and they've not stopped there. They've also asked us to prepare partners capital account. So I would put a format of partners capital account below so that simultaneously I can start doing the entries. So this would become my partners capital account. Obviously debit credit, which I forgot to write. You have to include this. Don't tell me that, sir, you didn't put, so I didn't put. My exam is over. I'm a qualified chartered accountant. You are writing the exam. So who has to be more careful? No, I'm not bad. I'm just telling you what's right. Yes, partners A, B, C, A, B, C. Further, what I have? There is D here. So D admitted. D is being admitted. So we'll have four partners A, B, C, D. So what do? Copy whatever is there on the debit, paste it to the credit. Make this be little small so that C can be made little big. There's little more big. Perfectly aligned. So here we have the format ready. Whatever they've asked, revaluation account and partners capital account. We'll go on reading the question and then go on posting the items to our revaluation account and trading revaluation account and partners capital account. Anything else that comes up newly will be our, what do you say, working notes that will also I'll also do it simultaneously. Let us start. So we're not going to waste any time reading the balance sheet. Before that, the only thing that we need to notice, ABC profit sharing ratio is 3:2:5. This is important. This will become our working note 1. So what are the names of the partners? A, B, C, D would also come. So what is their old profit sharing ratio? I could have typed OPSR, but I'm preferring a full form here. So what is the old profit sharing ratio? The old profit sharing ratio is 3:2:5. That I would write it as 3/10. Wow, Excel, wow. You made my 3/10 as 3rd October. Wow. 3/10, 2/10. 2/10. And C it is 5/10. 5/10. Yeah, D was not there previously, no? So is not the partner. So total will become 10/10 if you see. Hey, don't tell me it will become 10/30. Please, your maths teacher will rest in peace in such case. 10/10, that's basically 1. 10th of October. Wow, Excel, wow. I finally somehow sneaked it through. So I'm done with the first line of the question. And the balance sheet of the firm as on 30th of June 2020 is given. We will not waste time reading the balance sheet. We'll read the adjustments and then come back to balance sheet. Come on, first one. It was mutually agreed that B will retire from the partnership firm and in his place, D will be admitted from 1st of July. So B is the retiring partner, incoming partner. Is the incoming partner. I hope this is noted. Yes. Can you guys say Roger that? Meaning you noted it. Come on, let us go. Goodwill of the firm is to be valued at 3 lakhs due to the firm's location advantage. Very good. But the same will not appear on the asset side in the books of the reconstituted firm. So basically, they're going to raise and write it off, or they're going to adjust it through the capital account. So goodwill adjustment. This is number 1 is ratios. Adjustment number 1 is ratios. Working note number 1 is ratios. Then I'll take it to working note number 2. Goodwill. Goodwill. It is to be adjusted. Yeah. It should be raised and written off or adjusted through capital accounts. How much is the goodwill? Goodwill amount is 3 lakh. Am I right? Look what they've given. 3 lakhs. Yeah. Adjusted without opening goodwill account. Yeah. How do we do it? That is through capital accounts. How to do it? Don't worry. मैं हूं ना. किसका है ये तुमको इंतजार में हूं ना देख लो इधर तो एक बार मैं हूं ना. Don't worry, I'll teach you how to do. Next, we're going to adjustment number 2. But you're going to ask me, sir, why did you complete goodwill adjustment? I want the ratios to be over. I want to know who's sacrificing, who's gaining. Only when I have that data, then I can go ahead and then compute the goodwill thing. So let's go ahead. So what do we have after? Building and plant and machinery are to be valued at 95% and 80% of their respective values in balance sheet. So building, which is 100%, will now become 95%. Plant and machinery will get reduced to 80%. So building, there is depreciation by 5%. Plant and machinery, there is depreciation by 20%. Let us see. Building. 2 lakh 20 is there. It would become how much? It would become 95% of its value. So 5% is depreciation. So building is an asset. When the value of the building is decreasing, I would have to credit building. Debit will be given to revaluation account. So the journal entry for depreciation of building is revaluation account debit to building account. So I'll write here building account. You get that? So how much is the reduction? From 2 lakh 20, we'd have to reduce it 5%. Have a look. 95%. It is reduced to 95%. So I would write here, what is the value? 22 lakh. 2 lakh 20 to 5%. 2 lakh 20 into 5% is equal to 2 lakh 20,000 multiplied by 5%. It's okay, buddy. Give me the answer. 11,000 rupees. That is a depreciation. Next, we are not stopping here. We're going to plant and machinery. Plant and machinery account is being valued at 80%. 100% value is 4 lakh. You're reducing it to 80. So depreciation is 20%. So I would do here, how much is it? 4 lakh. 4 lakh multiplied by 20%. 4 lakh multiplied by 20%. How much does that give? That gives me 80,000. 80,000 is the depreciation. Come on, let's continue reading. What else is the adjustments given? Building over, plant and machinery over of the respective balance sheet values. Investments are to be valued or to be taken over by retiring partner at 46,000. Taken over by the retiring partner adjustment would come in partner's capital account. But first we would have to revalue, then it will be taken over. First, the value of the investments is to be recorded at 46. Let us see what is the value of the investments. Investments is of value 42. Now we should make it 46,000 and then give it to partner. When we make it from 42 to 46, are we increasing the value or are we decreasing the value? Increasing the value. So when we're increasing it from 42 to 46, such increase in the value of the investments has to be debited to investments account. Where will you give the credit? The credit will be given to revaluation account. Why? Revaluation is income. It should be created. Increase in the value of the asset investment should be debited. So the journal entry is investment account debit to revaluation account. Investment account debit to revaluation account. So here I would write by investments. What is this? 46,000 minus 42,000. So how much is the gain that we have here? 4,000. I hope that helps you. Let us go ahead. This investment is taken over by partner. Which partner has it taken over? Partner B. Investments are to be taken over by the retiring partner. Who is the retiring partner? I have told you here. Retiring partner is B. So when B takes over this investments, his capital will reduce. When the capital is reduced, you would have to debit capital. You get that? Other way around, investments are going out, assets decreasing, it should be credited. So when asset is sold, we write cash to the asset. When the asset is taken over by the partner, partner's capital account debit to asset account is the entry. So in the partner's capital account, here I am writing two investments. What am I writing? Two investments. Two investments account. Why is this investments account debit? So why is this investment account written here? Being asset taken over by partner. Taken over by B. How much? 46,000. How did I get 46,000? They've clearly mentioned in the question that he takes it over at 46,000. That's the reason we revalued it from 42,000 to 46,000. Perfect. Yeah. Trade receivables are considered good only up to 85% of balance sheet figure. Trade receivables, whatever is there here, trade receivables, 1,59,900, 1,59,000. Out of this, only 85% is good. So remaining 15% is bad. That we would have to write off. When we write it off, bad debts is the reason, bad debts is the expense. So bad debts has to be debited, revaluation account will be created. Or another way you can write it as bad debts to trade receivables or revaluation to trade receivables. The journal entry will be revaluation account debit to trade receivables. So I will write to trade receivables. Any profit or loss arising on revaluation will be routed through revaluation account and not through normal expense and income accounts. 85% is good, so 15% is bad. 15% of how much? 1,59,000. 1,59,000 multiplied by 15%. How much would that come to? That is 1,59,000 multiplied by 15%. Yeah, 23,850 is technically our bad debts expenditure. I have written it. Perfect. So what else do we have after that? Yeah, in the reconstituted firm. One second, let me close the window. There's a lot of noise here. Sorry for the short break. Yeah, where were we? In the reconstituted firm, the total capital will be 4 lakhs, which will be contributed by A, C, and D in the new profit sharing ratio 3:4:3. So there are two important takeaways here. Takeaway number one, the total capital of the firm will be 4 lakhs, and that will be in the ratio of capital that is 3:4:3. And then the new profit sharing ratio is 3:4:3, which will help us identify the gains and sacrifices by the partner. First, we'll go for the capital. So in the partner's capital account, which will start with the credit balance being capital, the closing balance will come on the debit. So here I would write to balance carried down. This should be 4 lakh rupees. Should be 4 lakh rupees. And this 4 lakh has to be shared by all the partners in what ratio? In their ratio of their capitals. Okay, 4 lakh. How much will be A? A will have 4 lakh multiplied by, what is this ratio? This ratio is 3:4:3. So 3 plus 4, 7, 7 plus 3, 10. So 3 by 10. 3 divided by 10. How about B? C and D, right? C and D. How much will be C share? 4 lakh multiplied by 4 by 10 and D's share would be 4 lakh multiplied by 3 by 10. I hope that isn't a problem. You can easily get this. Yes. Do you people get this? Yeah. Okay. How much is it? Come on, let me do it. 4 lakh multiplied by 3 divided by 10. 1,20,000. Same it will be for D. How about B? B will not have anything. B will have 0. Why? B is retiring. Yeah. How about C? C will have 4 lakh multiplied by 4 divided by 10. Yes, you would have 1 lakh 60. Now have a look. 1 lakh 20, 1 lakh 60, 1 lakh 20. That comes to 4 lakh as a total. So this is done, sorted out, done. So this is the first takeaway. Second takeaway is the new profit sharing ratio. Come to our working note number 1. In our working note number 1, we had written old profit sharing ratio. Below this, now I'll write new profit sharing ratio. New profit sharing ratio. So what is new profit sharing ratio? New profit sharing ratio is 3 by 10. Okay. 3 by 10 for A, 3 by 10 for D. B will not have anything. C will have 4 by 10 as a share. Again, total coming to 10 by 10. Now let us see who's gaining, who's losing. Let's see it as difference. Lot of them use formulas. I don't really believe in mugging up formulas. It's a simple logic that you need to crack. Once you crack this logic, it will be all easy. Come on, let's see difference. 3 by 10 is what A had before. 3 by 10 is what he has after. Has he lost anything? No. He is neither gained nor lost. He's all happy. What about B? B had 2 by 10. Now he's not having anything. So B is losing his 2 by 10. Do you agree with me? Sacrifice. B is sacrificing 2 by 10. So when B sacrifices 2 by 10, B will not get 2 by 10 share in the future profits, which will be compensated by the goodwill amount which should be paid to him, because goodwill is the future profits because of the past efforts. So that future profits what B will not get, it is to be compensated. He should be paid his share of goodwill. That is 2/10 of the money of goodwill should be paid to B. By whom? By the person whoever gains here. Should A pay? A will not pay. Why? Whether B is retiring or D is coming, A is neither getting more nor getting this. A was getting 3 by 10, A will continue to get 3 by 10. B was getting 2 by 10, now he's not getting anything. He's sacrificing. When you sacrifice, you want sharing goodwill. So B will be receiving 2/10 of the goodwill amount. B will be receiving 2/10 of the goodwill amount. Sacrificing partner will receive, gaining partner will give. You get that? Yes. Okay, come on. See, 5 by 10 used to get previously. Now he's getting 4 by 10. So what is happening? He is also sacrificing. How much? 1 by 10. He used to get 5 shares, 5 parts. Now he's getting only 4 parts. So 1 by 10, what is he doing? He's also sacrificing. So B's share in the future profits will come down. So what should happen? So when B share in the future profits is coming down, it should be compensated by the partner who is gaining. Who's gaining? D was not getting anything previously, but D is now getting 3 by 10. So D is the gaining partner. 3 by 10. What is it? Gain. So remember the logic here. Remember the logic here. Sacrificing partners will receive. Receive from Gaining partners. Basically, those partners who are gaining, they're buying their share of goodwill from sacrificing partners. Okay. So let us see here. So who should pay whom? Who's sacrificing? B and C is sacrificing. So B and C should receive when they're supposed to receive. When they're supposed to receive, their capital will increase. Their capital will increase. So I will write 2 B is capital account. Further, who else is supposed to receive? C. So I'll write C's capital account also credit. Why? They both are supposed to receive. Who's supposed to pay? It is supposed to be paid by D. Yeah. What is the amount? 3 by 10th of goodwill. So goodwill is 3 lakh. Goodwill is 3 lakh. How much is he gaining? 3 by 10th of the goodwill. So 3 lakh multiplied by 3 divided by 10. You should pay. How much is it? Let us do it. 3 lakh into 3 divided by 10. Technically 90,000 rupees. B. Okay, I'll put it till this side. Okay, B. How much is B's gain? Sorry, B's loss is 2 by 10. So I will do 3. You would have to do actually 3 lakh multiplied by 2 by 10. How much is that? That is 3 lakh multiplied by 2 by 10. 60,000 rupees is losing. You should get. So what about C? C, it is 3 lakh into how much? 1 by 10. How much is that? That is 3 lakh into 1 by 10. You guys get this? So the journal entry for adjustment of goodwill is this. Yeah, remember this logic. What is the logic? Sacrificing partners will receive, gaining partners will contribute. So D's capital account is debited. Am I right? So in the D's capital account, I'll write on the debit side. I'll write on the debit side. Debit to be what? I'll write to who are we debiting it with? We're debiting it with B and C. B is capital account. Yeah. To C's capital account. What are the amounts that is to be debited to D? 60,000, 30,000. Against the same thing, what is it that we should do? Against the same thing, what I'm supposed to do is I would have to write by this capital account. And what is happening? Whose capital is increasing? Not A. B's capital will increase. Okay, how much is the amount? 60,000. B's capital will increase. And 30,000 C's capital will increase. D should bring in 90,000 towards this. So this entire thing what I wrote now is goodwill adjustment. Do you guys get this? So this is goodwill adjustment, working note number 2. Yep. I hope this helps. If you want, I'll put here also. Perfect. Yeah. The amount due to retiring partner shall be transferred to his loan account. Any money that is supposed to be paid to the retiring partner will be transferred to his loan account. Yes, we're done with the question. Yeah. Only thing that we'd have to do is see the capital here, post it to the partner's capital account, close the revaluation account, post the profits or losses to capital account. That's it. We have capitals ABC. What is the capitals? 1,24,000, 96 and 1,60,000. So I would write here, I would insert another column to make it look perfect. By balance brought down, how much is it? A, 1,24,000, 1,24,000. B, 96,000. How about C, 1,60,000, 1,60,000. So A's capital is 1,24,000, B's capital is 96, C's capital is 1,60,000. How about D? D was not at all a partner. He wouldn't have any opening capital that way. He only brings in capital later. Okay. And long-term loan is there. We don't know whose loan is that, and that's it. Yeah. Now we'll figure out our revaluation profit or loss. Let's find the balancing figure here is equal to sum. We had one of this question in true or false also. How do we share the revaluation profit? Revaluation profit is to be shared between the old partners in old profit sharing ratio. So what are the totals? See, the credit side total is 4,000. The debit side total is 1,40,850. So the balancing figure would come here is equal to 1,40,850 minus this 4,000. 1,10,850 is a loss. What would I do? I would transfer it to partners capital by partners capital. This is my balancing figure, guys. Yeah, guys, you know, respetela, huh? Only unrespected. Yes, it is to be shared between whom? A. How much will A get? 1,10,850 multiplied by what is his share? His share of profit is old profit sharing ratio. Okay, old profit 3 is to 2 is to 5. So 3 by 10. 3 divided by 10. Yeah, same you would have to do for B and C also. Sir, what did you do? Wait, रुको जरा, सबर करो. 3 is to 2 is to 5. Oh, hanga. Hangene. 5 by 10. Yeah, come on, let me know. Put the amounts. How much? 1,10,850 multiplied by 3 divided by 10. Say I could have just straight away put this. I'm still putting it with detail. So here, and also the working as well as the amount so that you will not get confused. And this will be of some help to you. Yeah. The intention is to help you. I hope it helps. Let me know in the comments if it helps. Yes, these are the amounts. So what should we do? These should get posted to our partners capital account. In revaluation account, we have written it as credit. In the partners capital account, it will come as debit. What will I write here? Write here to revaluation account. What is the amount? L equals L is selection 33 to 25. What about B? B will be 22,170. What about C? C will be 55,425. What about D? D will not get any revaluation profit. Yeah, that's it. Now, how do we close? The balancing figures are there. Any balance, any difference here should go to, or to say, cash or bank account when it comes to A and C account, because A and C are the old partners who are still continuing. So if there is any shortfall in the capital, they should get it in cash. If there is anything excess, they'll take it home. What about B? B is retiring partner. Any balancing figure should go to his loan account. How about D? D should bring in so much money. I'll repeat, A and C are old partners who are continuing. Any excess money, they'll take home. Any shortage, they'll bring in cash. So with respect to capital account of A and C, the balancing figure is bank or cash account. Then B is retiring partner. Balancing figure should go to his loan account. Then D is an incoming partner. The balancing figure should be cash account that he will bring in. It will always be on the credit side. Cash account will be debit, capital account will be credit. Yeah. So first let me put the totals. Yes, is equal to sum. So I've just put the totals. In the exam, there is no need to write the totals. Yeah, you just have to find the amount. That's it. Balancing figure, just to drop 2 lines and you don't have to do the total. I'm not kidding. I'm serious. I did that and I cleared my final, and I've been telling this to all the students, people at multiple levels, CA foundation, CA inter, as well as CA final level, whom I've taught. I've asked them not to write the totals. They've written, so they've cleared it, even at CA final level. So writing totals at the end is not mandatory. Just draw 2 lines, chalega. Take the calculator, take the total on one side, subtract the other side, fine, sufficient enough. Perfect. Yeah. Yes, I know. There'll be still 2 people who will drop in the comments. Sir, is it mandatory to write total? Again, you'll ask. Yes, there is no mandatory condition to write totals. You need not write. Okay, come on. Let us find it for Mr. A then. 1,24,000 here, 1,53, 255 here. So what is it? He has excess money. He has shortage of money. So he should bring in cash. So I'll write here by cash or bank account. This is our balancing figure. How much is the total here? 1,53,255 minus this. Okay. How about B? B is a retiring partner. Balancing figure should go to loan. So I would write here 2B's loan account. There's no more a partner. You cannot have balancing figure. Yes, I hope you got that point. So what are you doing? Inserting a line. Sir, but why? I should write balancing figure. Sir, what will happen if you don't write? You might not understand. Sir, do you care so much? Very much. I have no clue. Yes, how much? This is equal to 1,56,000 minus 87,830 will go to B's loan account. Okay, that is closed. B's account is closed. Have a look. B's account mein debit side, credit side is matching. Now C's account. C's account again, it should be cash. 2,15,425 here, 1,90,000 here. So same thing. Is it matching? No. Sir, why not? Because only minus of that first row is there. Minus of the second row is not there. Now it will match. See, 2,15,425, 2,15,425. Okay. Now, last thing with respect to Mr. D. Mr. D should freshly bring in capital. See, 2,10,000 is the total on the credit. Debit side, nothing. Why? He should bring so much cash towards his capital. So how much is the capital that he brings in? He brings in 2,10,000. That's it. Now have a look. Your partner's capital account is tallying. Yes. So is your revaluation account. So this is the answer. Revaluation account, partner's capital account, followed by 2 working notes. One working note with regard to ratios and one working note with regard to goodwill adjustment. Perfect. Yes. By this, we are done with question number 4A. Now we'll go to next one. We'll do the question number 4B. Shall we? Yes, come on. Let's do question number 4B. Yeah. Trial balance is given. The following are the balances and particulars of AS College. Prepare income and expenditure for the year ended March 2020 and balance sheet as on that date. Okay. So they want us to prepare income and expenditure as well as the balance sheet. Perfect. Let us do it. Not for profit organization ka question hai. करेंगे हम होंगे कामयाब. We're doing it for AS College. AS College. In the books of AS College. In the books of AS College. Something went wrong then. Just close the file, which I didn't intend to do. So what are they asking? They're first asking for income and expenditure, then followed by balance sheet. Okay, income and expenditure account. We'll have expenditure side. Then we'll have amounts. Then we'll have incomes. So the format is almost ready. Perfect. Good to go. Perfect. Same thing. You'd have to prepare one more. You call it balance sheet. We'll copy the format, put it right below. Call it balance sheet. This expenditure will become liabilities and incomes will become assets. I think this by far is sufficient. You would have to do few working notes. I'll teach you then and there. Let's get started. From the following balances and particulars of AS College, prepare income and expenditure for the year ended 31st of March 2020. So income and expenditure. For the year ended, it's March 2020. Yeah, very important. Don't forget that. Similarly, for the balance sheet, I would have to write as on 31st of March 2020. As on 31st of March 2020. Ready. First one, they've given trial balance. The amounts on the right is credit, amounts on the left is debit. We'll go on seeing whether it is income, expenditure, asset or liability and go on posting. After I rate all of it, I'll see the adjustments. Or let's see the adjustments first. Remember that we have adjustments with regard to these items. That will make it easy. The first thing we have adjustment regarding is material supplied consumed with respect to teaching, research, student welfare and game and sports. So teaching, here. See, when you have teaching, research, these things, remember that there is a working note against them. Then teaching, research, student welfare and games and sports. Very good. Then in a way, I usually used to mark it on this one as to what is this mark, make the mark in the trial balance. So I'm not doing this for a reason now, because in the exam you are not allowed to. So I'll let you feel it really as to how will it be when you are not allowed to write on the question paper, but still expected to solve the answer. Okay. Next one, tuition fee, there's one adjustment. Store selling price, there's one adjustment. Depreciation is there. And that's it. Yeah, perfect. Come on. Shuru marana. Security deposit from students. It's a liability because you received that money from the students. And when the student leaves the organization and then goes, you would have to repay that money back to the students. So security deposit to students, 1,55,000. Liability, balance sheet, liability side. I'll write here. Security deposit. How much is the amount? 1,55,000. 1,55,000. First item done. Second one, capital fund. That's also liability, 13,08,000. So I will write here. Capital fund. How much is capital fund? 13,08,000. You might be wondering, why am I writing it in the inner column? Any profit or loss, meaning in the non-profit organization terms, it is called as excess of income over expenditure or excess of expenditure over income. Or if you have heard of, you might have heard of this what's called surplus or deficit. If there is surplus in I&E, that should be added to this capital fund. If there is deficit, it should be subtracted. Right now, my income and expenditure account is incomplete. So I would write capital fund amount in the inner column. After I identify excess or surplus or deficit, I will do addition or subtraction, post the balance to the outer column. Get it? So that's why I didn't write it that way. Next, I have building fund. So I'll write building fund. Building fund is again a liability. Building is an asset. The fund raised for the building is liability. How much? 19,10,000. I'll write here 19,10,000. Perfect. Then I have tuition fee received. Tuition fee received is income, 8,10,000. It will go to my income and expenditure account. Yeah, I'll write here by tuition fee received. How much is it? This is 8,10,000. I will write this in the inner column. You might be wondering, why am I writing in the inner column? Because there is some amount of tuition fee receivable from the government. We read it in the adjustments. Where is it? Is here, see, tuition fee receivable from the government for backward class. This should be our income as well as an asset, because it is income. Because it is tuition fee, our revenue, I'll write it in income and expenditure. Because it is not received, it will become our asset. Sir, will you write it right now? No, I'll come to the adjustments later. Right now, what I'm doing is only the trial balance. So I would written it in the inner column. Sir, you are smart. You have done this before, so you know it. Yeah. What about us? Your case, it's simple. You just write in the outer column. It is okay. Later, if you write the tuition fee receivable from the government as a separate item on the income side, still totally fine. You'll be given total 10 marks. You don't have to worry. Yeah. So 8,10,000 done. So next item is government grants, 5,01,000. So I'm assuming this government grants to be revenue grant and completely my income. So I'm writing it in the income side. This item, one more item will come. I would have to add it and leave. So I'll write here by government grant. On another day, government grant can be treated as a capital item and it can be written on the liability side, but I'm assuming it to be a complete income. Yeah, 5,01,000. No other information, right? Yeah. Next, interest on dividend on investments. This is our income again, 1,75,000. So I'll write here by interest on dividend. By interest and dividend. What is the amount? Amount is 1,75,000. 1,75,000. You're going in the order. That's what I want you to do. Many a times students, what I've seen them do is they'll first finish income and expenditure, then go to balance sheet. Why I don't suggest that is, you have to pick items. What will go to income and expenditure out of this? You would have to pick items what will go to balance sheet. So when you're picking, you need to read it to understand where you will go. So you might read the entire question 2 to 3 times. You can't afford to read the question 2 to 3 times. I'm reading the question only once and I'm solving. So I read one item, I write it. I read another item, I write it. I read another item, I write it. So you're going in an order. So now assume that all of a sudden my laptop crashes or there is a power cut or something happens. I won't lose the grip. So I know I've done it till interest and dividend. That's it. Cool. Next, when I start, I'll start from here. Whereas when you're doing it that way, you don't know where you stop. You don't know where to start from. You get that? So I can stop right now, talk anything, sing to you, dance, again come back and continue the problem from where I left. So you'd have to solve the question from one side. All the questions, if you've seen, no, I'll go on reading it little, go on solving it little. I don't like pick parts of the question what I want and then solve. Yeah, that's very important. You'd have to read the question from one side, systematic reading of the question, systematic solution to the question. Let's go. Hostel room rent. This college is running hostels and there are rooms there and that rooms have been given out and the rent is being collected. This is revenue or income. It'll go to income and expenditure 1,65,000. Hostel room rent 1,65,000. 1,65,000. Done. Next, mess receipts. So there is a mess or a canteen there, and from there they've collected some money. Mess receipts is 2,05,000. So I'll write here by mess receipts. They could have given the net amount. Have they given the net? So this is after deducting the payments. So it's okay, fine, that's cool. 2,05,000. That's actually very sweet of them. If not, we were supposed to write mess receipts on the inner column, write the mess payments below that, deduct it and write the net amount in the outer column. Or in another scenario, we can write mess receipts as income, mess payments as expense. Ultimate impact will be same. College store sales, how much is it? 7,60,000. So there is sales to the extent of 7,60,000 here, which you might get very impulsive and then try to write it in the income side here. But what I am trying to tell is I would suggest you not to write it in the income side, because with respect to this college store sales, there will be purchases, there will be opening stock, there will be closing stock. And very importantly, what we observed here is there is material supplied and then consumption is there. This will become our expenses. Yeah, I will open a separate stores account. This will write as this, I'll write as my consumption in the debit there, and this I'll get posted to our expense side also. And that sales, whatever is there here, store supplies, what is there, stores, yeah, college store sales. So this would go to my stores account on the credit side. Done. And I would write the opening stock and the closing stock, eliminate the profit part. Yeah, and one of them will be given, opening stock will be given, and or closing stock will be given, or one of them will be given, basically one of them will be given. So you would have to identify that. So this is an item which will go to my stores account. Why? Because there are a lot of adjustments with regard to stores here. So I would open a small ledger, which is my working note number 1. So what is it? Working note number 1. Working note number 1 will be stores account. Yes, I'll have particulars. Amount. This is my debit side. I'm copying it and then pasting it all the way here to make it up for my credit side. So what I have read so far is with regard to sales. So I'll write here by sales. What is it that we had here? We had store sales, right? College store sales. So much? 7,60,000. Here by. Can I write it as just sales? How much is it? This is 7,60,000. Yeah, the sales is the value of the assets that is going out. So basically I've written it here by college store sales. That is the amount of decrease. Perfect, guys. So actually I would not be writing it as by sales. I should be writing it as by receipts or something. Because the journal entry for sales is not sales account debit, it is cash account debit to sales account. So this is like trading account wherein I'm writing sales by sales, and in the receipt side it will appear on the debit. You get that? Receipts. I can write it as sales only here. Yeah, sales. In the receipt side, receipts and payment account, it would have come on the debit side as what is say to sales. So receipt side it is cash account debit to sales, and then from the sales account it's getting posted to stores account. Perfect. I hope there shouldn't be a problem there. 7,60,000 done. Now, would this 7,60,000 come anywhere in income and expenditure? No. Only the net profit of this 7,60,000, whatever the profit that you'll arrive at, that will come in income and expenditure. Income and expenditure is like P&L account. This stores account is like trading account. This sales value will not come in income and expenditure. Whatever the profit that you make, which is like gross profit, will come in our income and expenditure. Perfect. Yes, that shouldn't be a problem. Let's go now. So after sales, what do you have? Outstanding expenses. Expenses means expenditure. Expenses basically. Outstanding expenses is a liability. 2,35,000. Balance sheet liability. Outstanding expenses. How much? 2,35,000. 2,35,000. 2,35,000. Perfect. Let's go ahead. After that, stock of stores and supplies opening. So this is our opening stock. How much? 3,10,000. In that working note, I will write it as 3,10,000 opening stock. This is last year's closing stock, this year's opening stock. Will it come in income and expenditure? Nah. Why? This is like opening stock in trading account. It will not come in P&L account. How much? 3,10,000. 3,10,000. Okay, what do we have after that? We have purchases of stores and supplies. Purchases will come here. What will I write here? 2 purchases. Now you might be wondering, sir, does it come in income and expenditure? No, this is purchases. It will come in trading account. It will not come in P&L account. What will come in P&L account? Gross profit, which is carried forward from trading to P&L. Oh, is it like that, sir? Yes, it is like that. How much? 8,20,000. Where else will this come? This will come in your receipts and payment account as payment. This purchase account debit to cash. In cash account credit side by purchase. That is something like receipts and payment account in here. Next we have salaries, teaching, research. So salaries is an expenditure. So I'll write on the expense side. Wow, finally, first expense. So salaries. What is it? Teaching, research. Shall I write it separately? Yes, I will. How much is it? Salaries, teaching, 8,75,000. Any adjustments? No. Then we have salaries, research. Salaries for research is how much? 1,25,000. Okay. After that, scholarship. Scholarship given is also an expense again. How much is it? 85,000. So I'll write to scholarship 85,000 in the expenditure side. Scholarship 85,000 done. Then we have student welfare expenses, that is 37,000. For the welfare of students, the college has incurred expenditure. Don't tell which college will incur expenditure. Hey, all the colleges will do. How much is student welfare expenses? 37,000. What do we have after that? After that, we have games and sports expenses 52,000 to games and sports expenses 52,000. If you can observe, I'm leaving one line gap between each of it. You can do that in the exam as well. One page may you do income and expenditure account only. One page may you do balance sheet only. Don't try to fit everything in one page. Why do you have to give gap between each of them? In fact, if you've done any mistake with the amount, or if there is any working note and you realize late, you can easily write it beautifully in that without doing kichapichi and then adjustment in like putting in adjusting. You can write it neatly. You get that? It is okay. The tree is already cut, the paper is already manufactured. Just because you don't use the paper, the tree will not be born from the paper. Perfect. In fact, if you don't really do well in the examination and flunk in the exam, and if you end up writing the exam again, one more tree will be freshly cut. So better do well in the examination for once, clear it, and be an environmentalist. Huh? If you fail, one more tree will be cut because of you. You get that? So then after games and sports expense, we have other investments. Investments is an asset. It will come in balance sheet, asset side, 1,75,000. Balance sheet, asset side, investments. How much? 12,75,000. Then what do we have after that? We have land 1,50,000. That's also an asset. How much? Land is 1,50,000. Land is not a depreciable asset. There is no depreciation on land. But here onwards, depreciation will kick in. What is the next item? Building. Building. From here, there is depreciation. Building is how much? 15,50,000. There is an adjustment given. We will do it later. I'll write the amount in the inner column. 15,50,000. Yes. Okay. After building, what else do we have? After building, we have plant and machinery. The value of plant and machinery? Plant and machinery is 8,50,000. Sir, depreciation adjustment. That's what I'm telling you. Chill. Whenever you're doing the trial balance, do trial balance. We're going in one order of solving the question. Once we finish the trial balance, then we'll go to adjustments. 8,50,000 done. Furniture and fittings, 5,40,000. Okay, I leave 3 lines. Furniture and fittings. Furniture and fittings is how much? Furniture and fittings is 5,40,000. Okay, then what do you have? Then we have motor vehicle 2,40,000. Is there depreciation for motor vehicle also? Depreciation. Yeah, motor vehicle also has depreciation. So I leave 1, 2, 3 lines. Motor vehicle. How much is motor vehicle? Motor vehicle 2,40,000. Okay. Motor vehicle 2,40,000. No provision for depreciation is given. What I would do is I would subtract it from this value of the assets only. Less. I need a little bit of space allocation here. Provision for depreciation. There is old provision. There is additional provision to be created now. Both I would have to put. So I'll make this column little big. Good that we made this nice like this. Okay, fine. I'll remove the underline here. Or I can delete it from here, put it here. How much is the old or the existing provision? With regard to building, it is 4,90,000. 4,90,000 is the existing provision. Okay, this is current year, new provision, or what do you say, current year. Current year, how much provision are you creating? Current year, you are creating provision to the extent of, what do you say, the depreciation percentage given later. How much is it? 5%, 10%, 10%, 20%. So that I would have to deduct. You get what I'm trying to tell? So this is what you would have to do for every item. You would have to do this for every item. So I will copy paste this for other assets. Plant and machinery would have to say do the same thing. Furniture and fittings would have to do the same thing. Motor vehicle would have to do the same thing. But how much is plant and machinery depreciation? Provision for depreciation that is already there. Plant and equipment. Name is wrong. Okay, 5,05,000. 505. 5,05,000 is the existing provision. Current year provision percentage basis on 8,50,000 I will compute and later I will deduct. Then furniture and fittings pay how much? 3,26,000. 3,26,000. Get it? So current year depreciation, I'll take it from the adjustments and then put it later. Then I'll find the total provision for depreciation, deduct it from the asset, and the ultimate amount will go to the, what to say, the outer column of the balance sheet. Next, cash at bank 3,60,000. This is the closing balance. So it is an asset. Asset. I'll write. Okay, I'll write it at the end here. So I'll write here cash. How much is the cash at bank? Cash at bank is 3,16,000. 3,16,000. Then we have last item, library 3 lakh. Library how much? 3,20,000. I'll post that. Library 3,20,000. 3,20,000. Okay, perfect, and we're done. Okay, now we're done with the trial balance. Now let's move to adjustments. Material supplies consumed is given. So now whatever happened here throughout, we posted it only once because it is already been accounted twice. Double entry system has been conferred with. Either these items from trial balance will go to income and expenditure or go to balance sheet. Now these items what are given in adjustments have items which are never been accounted. They're freshly to be brought into the books of accounts. So you would have to think of and then give dual aspect accounting for it. Double entry system has to be conferred. So these materials, whatever are consumed, will decrease our stores and it will also be expense. You get that? So here in my stores account, I'll write by consumption. So what is the consumption? This consumption is with regard to teaching, research. Teaching, research, then students welfare and games and sport. Students welfare, SPRTS. So sports. So here is the credit aspect what will be recorded in the stores account because it's consumed, and this consumption of stores will go to my income and expenditure. That is debit side. How much is it? 52,000. 52,000. Next we have 1,45,000. 1,45,000. Next we have 78,000. 78,000. After that we have 24,000. 24,000. So total consumption is how much? Yes, is equal to sum. Sum of all this is 2,99,000. 2,99,000 is the consumption of stores, which should go to my income and expenditure on the expenditure side. So I'll write here consumption of stores. If you want, you can end up writing it in detail here separately. What to say, towards salary, teaching, towards research, towards student welfare, towards games and sports. You can write it separately, or you can add up under these items, individual items. You can add them up. I prefer writing it in total here. How much is it? It is 2,99,000. I would pick it from here instead of typing it 2,99,000. Understood, guys? So whatever is given in the adjustments will appear twice. Perfect. Next, tuition fee receivable from the government for backward class scholars. So you given tuition fee to, you have done free education to the backward class people under RTE. Government is supposed to pay money. Government has not yet paid, but supposed to pay. Firstly, it is your income because it's your revenue, and it's your income because you given coaching and you should receive this money. Secondly, it's an asset because it's not yet received. If it is received, you'll write cash account debit to tuition fee. If it is not received, you'll write tuition fee receivable account debit to tuition fee account. So it is income. So I'll write here tuition fee received is there. Here I'll write add receivable from government. How much is this? This is 82,000 rupees. 82,000. So here I've recorded the credit aspect of it. Yeah, here I'll write total. There you will get 8,92,000. Yeah, this 82,000 is an asset to us. So it would appear on the balance sheet asset side. I'll write tuition fee receivable. So here I go writing tuition fee receivable. How much is the tuition fee receivable? 82,000. You can write here if you want tuition fee receivable from government. Okay, boss. Next, store selling price are fixed at to give a net profit of 15% on selling price. So your stores are there, no? Sales are there. That will give 15% profit. On 7,60,000 profit margin is 15%. So here I'll write to margin. How do I get this margin? 7 multiplied by 15%. Is that what they've given? Yeah. Store selling price, there is a margin of 15%. Come on, let's do this. Is equal to 7,60,000 multiplied by 15%. 11,400. Yeah. 11, sorry, 1,40,000. This is income. This is income. This is like gross profit. This should get posted to our P&L account. That is income and expenditure. Or other way, this is an adjustment item. Once it has appeared here, it should appear here in the second time. What would I write here? I'll write by margin on sale of stores. How much? 1,14,000. You get that? I'm done with that C. Now we'll have D. Depreciations 5%, 10%, 10%, 20. And once I'm done with depreciations, I'm done with this problem. So come on, let's do this. Depreciation on building 5%. Building. How much is depreciation? Current year depreciation is this multiplied by 5%. 77,500. You get that? Okay, let us go for the next one. Plant and machinery. How much is the depreciation? 10% is equal to 8,50,000 multiplied by 10%. 85,000 is the depreciation. Next, furnitures and fixtures again 10%. 54,000. Motor vehicle 20%. Motor vehicle 20%. 20%. Am I right? Yes, there is provision for depreciation for motor vehicles as well. Allah? No, there is no motor vehicles pay. That's it. I was wondering. 0. Is there any opening? No. What did I put? Maybe I copy pasted the stuff. I forgot to change. Yeah. So by this we're done with depreciation. But remember, it is adjustment item. We have written it once. Where would be the second place that will appear? It is an expense. It will come in our expenditure side. So I'll write here to depreciation on each of the items. What are the items? P&M. Furnitures and fittings. motor vehicle. So you would have to post it individually. Okay, now come on, tell me how much is it on building? Only current year depreciation. Yeah, old provision is already there in the balance. Already there in the trial balance. You don't have to be worried about that part. That is not our current year expense. That is accumulated expense from previous years. Now plant and machinery, how much? 85,000. How much for furnitures and fittings? 54,000. And how much for motor vehicle? Ultimately 48,000. That's it. So how much is our total depreciation expenditure? Current year depreciation expenditure is 2,64,500. And here I would have to post the amounts to total. So tell me how much is the total depreciation? Total depreciation will be these two together. You get that? And this has to be deducted from here. This is equal to 15,50,000 minus 5,67,500. Okay. Same thing I would have to do here also. I would have to add 5,585,000. Total depreciation comes to 5,90,000, and from 8,50,000 if I subtract 5,90,000, I'll get 2,60,000 as the value of machinery. Same we should do for furniture fittings. 3,26,000 plus 54,000 is 3,80,000. From 5,40,000 if I subtract 3,80,000, I'll get 1,60,000. Same for motor vehicle also. 48,000 plus 0 is 48,000 total depreciation. From 2,40,000 if I subtract 48, I'll get 1,92,000. So by this we're done with all of this. What are we missing out on? So every question is over. We finished the question completely. Adjustments are all over. Yeah. Now we would have to close our income and expenditure, identify excess of income over expenditure, put it to our balance sheet. Before that, we would have to close our stores account. Is there anything remaining here? Let's check the totals. 12,44,000 on the debit. If I copy paste, I'll get 10,15,000 on the credit. So there is some amount of difference in my stores account. What exactly is the difference? There is opening stock, there is purchases, there is sales, there is consumption, there is profit. The balancing figure is the closing stock by closing stock. How much is it? This is 12,44,000 minus the total that's there above this. That comes to 1,85,000. 1,85,000 is my closing stock, which will go to my balance sheet as an asset. Closing space, or sorry, closing stock, closing stores. I'll insert one more column, last one. This comes from our working note number 1. What is the amount? Amount is 1,85,000. I've selected it, the cell, so you would get it right. 1,85,000 is the amount. So now we're done with our stores and working note number 1. All I have to do is close our income and expenditure. Come on, let me close my income and expenditure. Let me put the formula. I'll paste it on this side too. Okay, which side is more? The income is more, expenditure is less. So we have excess of expenditure over income. That's a great news. What will I write? 2 excess of income over expenditure. Sorry. So this is my balancing figure. So what would I write here? How much is it? Is equal to this amount minus some what we have right up here. How much does that give me? 3,14,500. So this has to be added to our capital fund. So I'll come to my balance sheet. I'll write here, add surplus, how much is it, is equal to 3,14,500. And when you do this, you will get this, and that's it, boss. We're done with our balance sheet. You can check the totals. To the Almighty, yeah, prayers have worked. It is correct. If this was wrong, then the last 1 hour what I've spent in solving this problem would have gone for a toss. That feeling is only different, no? When your balance sheet tallies, you feel like you're a rock star. You just achieved the invincible stuff. So that's it. We're done with the question on NPO, which has which had a requirement of we requiring to be preparing income and expenditure account followed by balance sheet. Yeah. So that's the end of our question number 4. So then we would have to go to question number 5 and question number 6. Two more questions. Let us do that as a separate part. Question number 5 as rectification of errors 5A, followed by 5B, which is computation of salary, looks like NPO question, followed by question number 5C, which is on manufacturing account. Then we'll have question number 6, which is company accounts, issue of shares. Question number 6B, which deals with debentures issue, and question number 6C, which is a theory question. Yeah. So that would be not a long one. That would be a question which will go for an hour again. So let's have another part. I had previously told you that we'll do it in 3 parts, but right now I'm making it into 4 parts. So we'll do 4 parts, wherein this is the part 3, and we'll have a follow-up video part 4 coming up to you tomorrow. So I hope this question paper discussion is adding little value to you. My ambition is not just to solve the questions here. If I would have to just solve the questions, I would do it at a very faster pace. In fact, I had done this for November 2019 examination, where I had finished the entire paper in less than 3 hours. That's always possible. Here I was just trying to weave around the concepts that is there around this chapter, explain them in detail to you, and then went on to solve them. If I take it up as a challenge, I can solve it within 3 hours. But the objective is not just to solve it in 3 hours, but to make you understand the entire concept of the chapter and how to do it by just merely solving this solution sheet. Yeah. And that's it for now. See you all in part 4, which I'll be uploading tomorrow. Yeah, that is today is Tuesday. Wednesday, you'll see part 4 coming up. And that's it for now. See you all in the next one. Till then, stay in the game. Bye bye. What are you waiting for? Go, no. Try and do something else also in life. I will come back tomorrow with the next part. Get lost.